Good evening, I'm Giuseppe Basile, I'm the Innocent Trader. You can find at the website www.fibstalkertrading.com. I also have a blog at www.fibstalker.com. I post regularly on Twitter using the @fibstalker nickname. Good evening, today is Saturday, March 29, 2015, and this is my weekly review for the 13 markets I follow, and I distribute this review to my newsletter followers. And if you want to subscribe to the newsletter, it's free. You can go to www.fibstalker.com and subscribe there. I also distribute this review to my students. I have coaching program which is called Fibstalker Methods Coaching Program, and if you're interested you can go to www.fibstalkertrading.com. So let's start from the euro, which is what you see on the screen here. Now those who follow me know that, and I'll start from the weekly time frame here, that this market has actually respected the 139.70 level here and went into the first target. Now there is nothing below price at the moment because as you well know if you follow my research, price went below that 112 level there, and that's a very important level that is followed by program trading as well. So you can see the 50% level acted as a support twice, but then when price went below that 112, the game was over for the euro. So there is nothing holding this euro, and there is the potential for this euro to get into the second target 293 there. And one way you could get there is by bouncing into the next measure move and level watched by algorithms on the weekly time frame, and that would be this 111.60 111.80 level here. So at the moment we have price trying to get into that level. At the same time, we had another important level that came into place. That's the all the way halfway back from recent swing highs to lows, and as you can see, price is finding participation at this level. So price could just continue lower from these levels. If we move above 111.31, then 111.70, 111.80, 111.60 to 80 becomes our resistance level. And that's a very high probability trade that could actually bring price into 101, and then its continuation to lower price 093. Moving to the S&P 500, those who follow me know that I've been timing a level in the past, the 118.30 level, and that's something that was timed using the high of in 2000s here. So that is something that is shown here. It's this high, and I explained the reason why that high is important, and by tracing from that high to highs, we are able to anticipate well in advance, with several weeks in advance, this 1830 level here. So consider that this is a continuous contract, so these values vary a little bit when the price of the different contracts are actually put together to build the continuous contract price. And as you can see, price went into that first target of this measure move, and it was not straight line before that happened. The price actually came to retest other levels here, and I gave also in advance the potential level of resistance and participation here. There was an extension long, it was another bull anchor, and this was known to us with 7 days in advance. And I have a proprietary timing technique, which is called Fib stalking timing technique, that I used to study the sequence of measure move of the algorithms on the smaller time frame. And when the participation from the larger time frame wins the participation on the smaller time frame, counter trend participation, that's an indication that there is enough participation from algorithms at these levels to keep pushing price higher. So as you can see, this setup here as a first target 21.14. The market did not get there, and it bounced twice now to into this level, the all the halfway back here from lows in December to highs that we saw end of February here. And as you can see, we had a participation. It could be timed here again, and a second participation which could be timed last week as well. So there's a possibility for this market to continue higher. There are three setup: long setup 1833, another long setup in 1960, and another long setup 2032. So there's no reason to believe that this market will move lower. Moving to the dollar index obviously had a correction, and that's actually matching the correction we are seeing in the euro as well. There was a move lower here, this spike. I don't know if this price is correct here. I didn't see this 2 weeks ago, so last week. So at some point this materialized. I'm not sure that that's real price data, but if this market continues lower, there is one level we can get, and that would be this 93.57. And the market could of course correct and start moving higher before. So there's not really a lot of information for this market at the moment. Moving to gold, we know that gold has been testing the area of potential support twice, and this is the area starting at 2029. And when the sequence of measure move lower failed here, I mentioned that we could see this market start moving higher. That's exactly what happened here. So the sequence of measure move that we had was from lows to lows here, and we had participation at this 1222, progressing to the first and second target, and then the next measure move failed, and that's when the measure move long started. And what we saw here, and I mentioned this in the past, so congratulations to those who took the long here, and the long was a well-formed 50% retrace here, which progressed into first and second target. And at the moment apparently this market keeps moving in extensions, and there was a break of an extension here, so there is a possibility for this market to come and correct all the way halfway back into the 50% level here. So this is a real possibility. Correction into 1182. If that happens, that would be and we see participation. So the sequence of measure move breaks, counter trend measure move breaks. That's an opportunity to get long into 1240. Moving to the US dollar versus Japanese yen. Those who follow me have been able to time twice this 116 level here, and the market has reacted to this level. But let's don't forget that this market is waiting on the weekly time frame. It's neutral on the weekly time frame, so it's waiting for a retest of a level, and we will see whether the weekly algorithms will actually enter at this 112.90. So at the moment what's going on is that this market is still on top of this 116, and there's a possibility that this level will be tested again. If price loses this 114.60, there's a possibility for a slide into 112.84, and that's what we are looking for in this market. Moving to the euro versus the Japanese yen here. Those who follow me know that the sequence of measure move in this market on the weekly that we initially identified has actually failed, and we had this participation here 126.40, bringing price into the first and second target here, and the next measure move was an extension. Initially it was sorry, this is not the right trace, because this market has been modeling in a different way, and the way we modeled in the past was an extension from highs to highs, which were pressing to the first and second target, and then we used that high to model the next measure move. As you can see, it was valid because there was participation at this 136.65, and then price bounced a number of times on top of this level, and then eventually broke the level and price reacted into that first target. That was an indication that this market was actually ready to move into the old way back, and that's what we've been seeing in the last few weeks here. And we have a potential extension long here, which is a short, sorry, which is bringing price into the price into the first target here, and there is the potential to bring price into that second target. This is not the best trace for this level, but it clearly shows that this market is extended, and this is an extension short that keeps moving lower. And there was another opportunity in the last 2 weeks, and that was the low to highs to lows here, which brought an opportunity to trade, to keep trading this market short here. And the level that we want to see this market, we're going to probably see this market is 122. Moving to the pound versus Japanese yen. This market, as I mentioned in the last few weeks, have been reacting at the weekly, all important weekly level, the 184.20, and we saw initially this level holding, then price got into holding here twice, then price getting into that area, and then he found a lot of participation on the downside, and eventually when the level was retested again, there was participation on the downside. So there's no doubt that this market is respecting this important area of resistance here, and so there is the possibility for this market to retrace all the way into the 153.30. So that's what has been happening lately, and there were opportunities to capture this the continuation of this move lower. Congratulations to those students who did that. It was not easy to capture the next measure move here, but we know that once the market actually lost the all the way halfway back here, also we know that there was a confirmation of a continuation lower here. So there are different ways to capture a continued move lower here. The most important thing is that you had to keep in mind overall um, the overall scenario here of the market moving lower starting from 184.20. Moving to the euro versus the Canadian dollar, we know that this market has actually broken an important level, and that level is the all the way halfway back from lows to highs here. And initially we had participation at that level 138.62, and then 2 weeks ago that level was pierced on the downside. So we also identified a potential level of participation here, and as you can see, participation at this level was enough to bring price into the first target. This is an extension, so there is a possibility for this market to just continue lower, and we are seeing in the last 2 weeks a move higher here. So there are two levels that we have to keep in mind. One would be the old halfway back from previous highs, and these are always very important levels. And there is also another bull anchor, which is the low of series of 3 bars, which is out of play at the moment, so that's not something that we can use. So if this market actually gets into the old halfway back, that would be a good opportunity to short this market 139.40 for a continuation lower into this area. And of course, you can apply these methods also on the smaller time frame. There is here on the daily time frame, there is another bull anchor that has been respected and continues to be respected, on Thursday as well. Now it's been challenging again. So this 137.4 is also an important level. If the sequence of measure move fails here on the smaller time frame, the market could actually invert from here. If 138.15 it's pierced on the upside, then there is a potential to see this market at 139.40. Moving to the pound versus the US dollar, this is another important market. It's always very important to follow this market, and this market actually is is actually, tends to follow the euro as well, tends to follow the euro, the euro dollar. So once we and like the euro dollar, there was an important development. As you can see, this market respected this 169.55 and then also pierced the all the way halfway back here, 61.8% level, 149.20. So that's an important development as well. And you will remember that we modeled very successfully this measure move here, the following measure move with this trace, a low to low. It's an extension 155.04, and price got into that first target. And after that, being an extension, we know that this market can actually continue lower into this 142.73, and at the same time we have highs to lows here, and as you can see, that level, the 150.98, 151, um, um, price participated at the level. So there's a possibility for this market to just continue lower into that second target of the larger setup, which is again 142.73 and would correspond to the previous lows as well. Moving to the Australian dollar versus the US dollar, you know that this market actually has been moving lower and reached the second target of a very large measure move here, highs to lows, a traditional measure move which progressed into the first and second target. It took a lot of time. It took over 1 year here, 5 quarters to get there, and then we saw price profit taking at that level. This price is also on top of a very important area of support, which is all the way from 2001 to highs in 2011, and so there is a possibility for this market to get some sort of participation here, and the next very large measure move where participation of algorithms could be anticipated is that 08206. Now, we saw last week we saw selling in this market, and this could be modeled from participation from highs to lows here, and that's the reason why we are seeing that participation. Now, doesn't mean that the market cannot pick up and moving higher. If we break this 180 17 18 there, then there is a possibility for the market to go much higher into that level 08206 that I mentioned before. Moving to the next market, that's the US dollar versus the Canadian dollar, and this market actually has been moving higher very aggressively, of course, pushed by the strength in the dollar index, and the 126.22 area has acted as a resistance for 2 times, and the first time at the beginning of January here, and then again mid of March, and then this market is continuing higher again, but it's just below this 126.23. So if this market we model this market as an extension, a sequence of extensions here. After he continued moving higher, first and second target hit, he went well above the second target. So if he retraces, the next level of participation that we're going to find for this market is going to be the 120.56 in case this market continue its correction. Moving to the New Zealand dollar versus the US dollar, this market also, like all the currencies trading against the euro, is looking for a retracement into a level which is this 068.73. Now it also broke a partial range measure move here, and that was an important indication that we could actually see even lower price into that 068, and eventually I believe we are getting into that level now. You will remember that in the last few weeks we've been following a potential um, identifying a potential level and area of resistance, those 70, starting at 07607, and the uh, the the um, the area of resistance here ends at above 07708, and as you can see, price got very close to the level, but that then he found a strong selling last week. And we also know that there is another level that we have to watch, but the level didn't come into play as well. That's an extension chart, and of course there is a possibility for that market to get into that level. So on the daily time frame, we saw this market moving in a traditional measure move here, and it broke price into the first target, so there is still a possibility for this market to continue higher, and that would be if and when it tests that 075 35 level here, 40 level, that could continue higher and bring price right into that resistance level. As you can see, the first target 277 lines up with the first target of the next measure move, and that would also line up with the resistance level. So it's important to understand and study the sequence of measure move lower here in this market to 75.35 to see whether we are going to continue higher into that 77.89. And finally, the US dollar versus the Swiss franc. You will remember that this market actually had a swift move lower, actually did not even trade for the majority of that range there, and then got participation at this 86.60 level, which brought price higher into previous highs, and we saw in the last 2 weeks a strong correction here. And of course this market is very extended. Initially started respecting the all-do halfway back here, and then eventually broke higher. So we're seeing a potential resistance here, and we need to find the level now. 94.81, it's one potential level, but and we have 80 pips, so sorry, 8 pips, so it's a little bit too high as a front end, but it could be possible that this market is actually respecting this level. So if this level 094.81, which corresponds to a valid extension long, is retested successfully and the market keeps moving higher, we could see actually this market getting into um, the the actual target of the extension as well. So let's see if we can actually see where these targets are located. So the first target here would be the target of this 95, 94, 81 level here if it's retested, and this would help price into the first target of the larger setup that I mentioned before, and that would be the 086.55 level. Okay, so there is a possibility for this market to continue higher, and as you can see here, the second target of this extension at 094.81 would correspond to the first target of the larger time frame. So there is a possibility for this market, if this 094.81 is respected, to continue higher. Okay, so this is all for my review today. I wish you a great trading and non-trading week. I also want to make an announcement. I will not be in Canada in the next 2 weeks. I'll be back to Italy, so you will not receive my Fipstalker weekly newsletter with the review. But I'll start the review as soon as I'm back, and so you will receive the review on Sunday the 19th, April the 19th. So thank you very much and have a great day. Bye bye now.